Hey guys, this is Connor from Futures Analytica, bringing you another live futures trading video. Once again, we're trading ES on the 15 range chart. Today we are going to be trading the market open. For me, this is at 6:30 Pacific Standard Time. We are using the Polarity Automated Trading Interface, which is an order flow automated trading system. Our plan here is at the market open, we are going to turn on the strategy and click on the arm both button. This is arming the strategy and now enabling it to look for potential trades. As you can see here, shortly after that happens, we get filled into a long trade. If you might notice here, price was moving down before we got pushed into that trade. However, once it opened, we got pushed into a long trade. You'll see that that sell limit order for our take profit is right at that green automatically marked absorption line. You're going to see here that we have left the strategy on and we're in trend mode. And you'll see that after this trade closes out for a profit, we're going to wait a second and we realize that price is not continuing upward and it's re-entering the channel. Because of that, we're switching it into regression mode, meaning that we are looking to take advantage of chop. Chop can occur even when delta and price are correlated. However, it is more difficult to spot accurately when this happens with delta and price being correlated. The way we're narrowing that down is that you'll notice that price is following that green reverse strength line. The green reverse strength line is a free indicator and you can download that in the description. But that is what we're going to be using as our point of reference when determining whether or not this chop is going to be broken. And right here, we get filled into a regressive long trade with our take profit being slightly above that green reverse strength line. Basically, all we're doing here is we're waiting to see if price deviates too far away from that green reverse strength line. And if it does so, we will switch it to trend mode. Also, sorry guys, I'm a little bit under the weather, so I'm not able to give a very clear amount of commentary today. So I apologize for that. Anyway, we got filled on that last trade for our second win of the day. And you'll see here that price now is deviating from that green reverse strength line, meaning we put it into trend mode here. Price bounces off of that red automatically marked support level there, but we get filled anyway for our first short trade of the day. So right here, the footage is sped up 4 times. So to contrast that with the amount of time it took to get filled on the last trade, you'll see that we got a ton of resistance getting filled here, which is exactly why we're trying to arm long. Essentially, the reason why we're doing this is that previous absorption level on the screen there, along with weakening sellers. Now you obviously can't just make a trading decision based on those two things alone, which is why we're using the Polarity Automated Trading Interface to tell us when to enter, the optimal time essentially. It's basically going to wait for a triple stacked buy imbalance here to give us the best optimal chance of getting a successful trade. And you'll see after doing that, quite a bit of time passes before we finally get into a long trade. And that long trade is placed right at that previous sell absorption level. So we have a pretty good chance of price both sticking here if it tries to go down, as well as a good chance that there's going to be a lot of aggressive buyers stepping in to bring us into that take profit order. And now I want you guys to take note of both the upper absorption level and lower absorption level that have just formed, along with that high entropy that we're seeing there with delta price correlation being extremely low. Both of these things are leading us to now being in the arm both regressive mode. We're going to try and take advantage of the chop here that is forming. Great advantage of this style of trading is we're able to see these ranges form with high confidence before you see it with price action. With price action, you'll often need to see a lot more confirmation that it's a new range, but with this, we're able to use order flow to determine whether or not it's an actual range by determining if there is absorption or not. And you'll see that we got filled there pretty quickly, along with an awesome regressive trade on the short side, leading us to have price try and fall back into that channel after it poked its head out of that absorption channel there. And as long as that high entropy is maintained, as well as price sticking within the borders of that absorption channel there, we're going to keep the strategy fully enabled, along with it being inside regression mode. You'll see there we got filled along with now a long trade that is in the regressive direction. I think I've said this before, but I'll say it again. There's definitely more money to be made trading choppy areas than there are trading trend areas, because choppy areas can last for a really long time and you can keep taking advantage of the exact same price action over and over again. And you'll see that there was another winning trade. Our total profit is now up to $5,500 on the day, and we're not even 15 minutes into the trading day. That being said, I'm gonna remind you guys that I am on 5 contracts of ES here. So you're gonna have a lower amount of total profit per trade, but that also means less risk per trade. It's pretty obvious, a basic fundamental value of trading, but I still think I should state that. So here you'll see that price closed above that absorption channel. In this case, we should have swapped it into trend mode. However, this all happened so quickly that when it closed above that level, we got filled into the next trade within the next 3 seconds. So we actually should have been in a trend mode trade here, but we get stopped out. I'm not gonna count that obviously as a win because it's a mistake I made, and I would honestly expect you guys to make the same mistake, but that should make more sense about why this trading decision happened here. As you'll see, I obviously should have been in trend mode, but hindsight's 2020, and we don't always have access to that level of analysis and execution that we do when we're looking back at a trading day, especially when things are moving just as fast as they were in this trade. You'll see there that we swapped it into trend mode as we've corrected our mistake, and we want to make sure that we're not making that same mistake in future trades. I want you guys to notice here that we are in trend mode regardless of the fact that we have that green resistance level that was marked earlier automatically by Polarity. The reason we're doing this is that 955 and 705 delta levels that came bars both prior to this one are the second and third highest delta numbers we've seen since the market opened by a significant factor. Along with the fact that that previously marked level has never been tested before and was so far back, we're not even going to include that in our analysis for this next trade, which ends up happening pretty shortly after that. Keep in mind that you can actually get filled into short trades in trend mode. So we could have actually gotten filled into a short trade there if the market was deciding that it was going to go short. Now, obviously that's not perfect, but it does take some of the burden off your shoulders when deciding what trade to take. You're not picking the direction, the system is actually doing that for you, unless you have, of course, individually selected the arm long or arm short button like we did with one of our trades today where we selected arm long. Now, I've gone over this before, but I want to go over it again. I want you guys to look at those quadruple stacked imbalances with these zeros on the left. This is called an incomplete imbalance. This is going to lead to a very short-term price spike in that direction, meaning that it was a valid polarity trade in the long direction, and we took advantage of that short-term movement. However, price is now likely to return to it to complete that auction, essentially. Another reason why we are going into regression mode here is that divergence that we spotted at 651, where price moved downward but closed with positive delta. That's not necessarily high entropy, but it does give us an indication to confirm that incomplete imbalance. So right there is that short fill. Price does end up bouncing off of that level and completing that imbalance. Not before giving us a profitable fill, of course. And that is our last trade of the day, bringing our total profit to just over $6,000, almost $6,400 actually on the day there. I'd say that is an awesome first trading session back with full position sizing after the holidays. As you guys might have heard from my previous video, the holiday season was super tough for me. Lost a family member, but now that we're back, given us that full mental capacity again, we've returned to 5 contracts per trade there. So we're able to have that full leverage, be able to make more money per trading session per trade. And along with that, I can now deliver you guys fully thought out content with a lot more in-depth analysis into my trades. So I want you guys to prepare for some more awesome analysis in the future and some dedicated tutorial videos, which I know a lot of you are super excited about. But our next episode is going to be a continuation of our Earn to Trade series that we had started before, where we're going to get access to $200,000 worth of funding capital once we pass that evaluation. If you guys are interested in that, check it out in the link in the description. Anyway, I hope you guys enjoyed the video, and I'll see you guys again next week, hopefully in better health.